What's your WEX word of the day?
My WEX word of the day is hidden. Stocks are having their best election year since 1976, but the indexes are hiding losses for the average stock this quarter. The average stock is down while the index is up. For the S&P 500, the index is up 4% this quarter, but the average stock, looking at the equal weighted S&P 500, is down 1.5%. And that's true wherever we look around the world. In fact, the average stock in the whole world, the MSCI All Country World Index, is down slightly this quarter, while the global benchmark itself is up 3%. Of course, that's fueled by the mega cap AI stocks. If you didn't own them, Frank, you might have lost money this quarter.
Absolutely. What did you make of NVIDIA's pullback? I've been saying in the show, talking to a few people, including a managing director of a big bank. They thought it was just insider selling, a little bit of profit taking, no change to the fundamental story, at least not until earnings. Agree or disagree?
There doesn't seem to be any change in the fundamental story, but there has been a lot of hype and attention. Certainly when a stock gets that much flows and accounts for that much of the performance of the market, volatility is par for the course.
All right, I want to get to your mid-year outlook. According to your report, the first half of the year followed what you believe would be a U-shaped recovery. Where are we at in that recovery? And give us a sense of how you see things going the rest of the year.
We are finally seeing this manufacturing recovery that's really helping to lift Europe out of the recession it experienced last year. So that's great news. We are starting to see that in terms of earnings momentum, but elections pose a risk to trade and inflation, two very important things to the markets. We saw the stock markets in India and Mexico fall 6% on the day they reopened after their elections, as populists had strong showings. Of course, we've got French and UK elections in the next couple of weeks, and markets might begin to price in more uncertainty ahead of the US election in November.
All right. I also want to get to your pick and your mid-year outlook. It's actually overseas markets, in particular Europe. One thing you're pointing to, I want to point this out. You're saying that the earnings estimates for Q3 are actually higher in Europe than they are in the U.S., but use a different system we generally use here on CNBC. You're looking at the IBES. We usually use LSEG. But again, according to the data that you're using, the S&P earnings in Q3 are going to be up about 8.5%, while European earnings up 11%. So that makes Europe your pick.
Yeah, it's been a long time since we've seen Europe's earnings growth outpace those of the S&P 500 or even match them, whatever the actual numbers turn out to be at the end of Q3. The earnings in the stock 600 index slightly better than the S&P 500 in the third quarter. It's been 5 quarters since we've seen that. And that's due in part to easy comparisons to last year and that recession we saw in Europe, but also because of the economic recovery that's lifted Europe out of recession. Investors may want to consider European stocks now offering similar earnings growth to the S&P 500 at much lower valuations for the first time in many quarters.
But all European stocks aren't the same. It's not a monolith. We've been talking about on the show about French elections that are beginning today, wrapping up this week. Does that change your opinion at all about France in this European story?
It doesn't overall. France and the U.S. tend to behave like the U.S. is a tech ETF and France is an industrials ETF. Despite the political volatility, that relationship remains intact. We like sectors like financials and energy and materials, moving a little bit away from technology as we look out to the second half of the year.